Today we're talking about changes to the quarterly firearms and ammunition excise tax return. And so this is a return to report and remit the tax that's imposed by Title 26, Section 4181 of the code. And it's a tax on the sale by the manufacturer, producer, or importer of firearms and ammunition. The tax rates vary between 10 and 11% depending on the article, but that's fundamentally what's being reported on the return and the changes to that return that we're talking about. This form is put out by the Alcohol Tax and Tobacco and Tax Trade Bureau, and the TTB is an offshoot of what historically would have been the ATF. The ATF in 2002 was sort of split into two organizations. There's sort of this intense firearms division, and then there's the TTB. And the TTB is the unit that, as the name implies, does alcohol, tobacco, and the firearms excise tax and administration that we're talking about here today. So Andrew, what about the form?
Candidly, the form was actually changed about a month and a half ago. So the question might be, well, why are we talking about it now? Is it old news? We thought it'd be helpful to bring up today because, well, frankly, quarters have just closed, and the activity of quarter close, if you're not in finance or accounting, I'm sure your finance and accounting counterparts are going through that process now. So we're finally in a position that we actually have the data to do the return. So we thought helpful, if you haven't looked at this before, to kind of tee up the topic, or possibly that you have, to kind of bring it back around while we now think about compliance. So, and just to be clear, the TTB, of course, updated the instructions. They've put out guidance on the website that goes through a detailed walkthrough of all the changes, mathematical presentation, what have you. But we thought it'd be helpful just to point out two changes that, at least in our experience, may impact prep time. Maybe not in the future, but at least maybe in this first quarter. So the two kind of larger changes were on line 8, which is the sales of article, or the sales price of articles sold historically, which is now the sales price of articles sold as well as put to a business use. And why is that important? That's important because historically line 8 was the sales values, line 14 was the business uses, but only for taxable uses. Now we have a requirement to report all uses up on line 8. And you may ask, what happened to line 14? Well, line 14 was taken over fundamentally by an exploited version of line 12. So instead of having a line 12 that you reported just your eligible adjustments at a summarial level, now it's line 12 eligible adjustments for the tax itself, eligible adjustments for non-taxable components, and then finally an eligible adjustments other on that historic use line 14. Again, these aren't things that are new to calculate, new to consider for the most part, but fundamentally may require a little bit of extra time, especially this first quarter. Thank you again, and we look forward to putting out more videos.